Well, I think we have to consider carefully how this pandemic is affecting the economy. And while one of the issues is certainly allowing businesses to open up, an important component is not only being open, but also to have the ability to have customers come in and feel comfortable in that setting. So when you think about retail trade, when you think about getting on a plane, when you think about going into a restaurant, you have to be sure that you're not going to be unsafe by going into those situations. So that's not a matter of whether business is open. It's a matter of whether there's going to be sufficient demand until people are comfortable that community spread has been reduced so that they can start doing those activities. And I would highlight those activities all involve a lot of people. So when you look at retail trade, when you look at restaurants, they employ an awful lot of people in the economy. So to get back to full employment, we need people confident that they can go to those kind of places and be safe.
Eric, does that concern extend to worries about a potential second wave, and how does that figure into your outlook?
So I certainly hope there's not a second wave. I think if we open up too quickly and don't do it smartly, we run the risk that the economy will be worse off and the public health will be worse off. So that it's not an on-off button. You don't have to be completely shut down or completely open. The important thing is to make sure that you stop the community spread of the disease. So that's going to vary across the country, but it's really important that we continue to focus on the data before we open up the economy too much.
Eric, you are very busy now, and you're about to get a whole lot busier. The Boston Fed is the point bank on the Main Street lending program. Can you tell us when it will open?
We expect it to open before the end of the month, and it's something that we've been working on quite diligently for the last couple of weeks. People are working nights and weekends to try to get it up as soon as we possibly can.
So this is a $600 billion program that offers 4-year loans, if I'm not mistaken, with 1 year of deferral. How many loans are you prepared to give? There are, as I understand it, thousands and thousands of companies that qualify for these loans between 500 and 15,000 employees. How many loans can you give out? Do you have enough money?
I think we will have enough money. So it remains to be seen exactly what the demand for this program is. The program's designed for businesses that were healthy at the end of the year, but have suffered a severe shock as a result of the pandemic. To the extent that they meet that criteria, I think there may be a significant demand. We'll have to wait and see. But I think we have enough capacity. One of the issues with opening this facility is we had to have the ability to reach out to literally thousands of banks and be able to take thousands of different kinds of loans, which are not standardized products, and be able to bring them into our special purpose vehicle, be able to bring them to the Boston Fed and provide the financing. So as you know, banks have to be available to provide, depending on the program, between 5 and 15% of the stake of the loan, and the rest is being met by the Federal Reserve.
Mm-hmm. Eric, Sarah said your unemployment rate is forecast in the double digits. I think she was being kind or polite, as she often is. You have a 20% unemployment, right? It is double digits, but it's really high in the double digits. I assume that's the peak. When do we reach that peak, and what happens by the end of the year to the unemployment rate in your forecast?
Well, Steve, you know that the April forecast was 14.7% for the unemployment rate, but there was also a significant component that looked like it might have been errors in how the data was collected, where people said they were employed but had not been at work that week. So I think we were already relatively close to 20%. I don't think we can be too precise at this point. There are a lot of things going on in the economy that make assessing exactly what the unemployment rate is difficult. I would say there's a difference between unemployment that is temporary and created by a state-mandated shutdown and an unemployment rate that is caused by permanent or more permanent unemployment rate, which would occur if a business failed or if it had lack of demand for its products. So what we're trying to do is make sure that doesn't happen. So I'm expecting that we're going to continue to have some bad news on the labor market over the next couple of months. And then we're going to start seeing a pickup but it's a pickup from a very low base that's reflecting the stoppage of the economy in order to deal with the pandemic. So my expectation is that we will still have double digits by the end of the year, which means it'll be much less than 20%, but still significantly higher than a normal economy would be.
And Eric, I just want to wrap up where we started with your views on the outlook. It seems like what you're saying is if consumers lack the confidence to go back to restaurants, go back to concerts, go back to things that are substantial parts of the economy, that it's hard for you to say that we're going to be at full steam ahead or firing on all cylinders even by the end of the year.
Well, 20% of the economy, 20% of the jobs are industries such as retail, trade, and restaurants. So if you're not comfortable going into restaurants and going into stores, I think an important consideration is what the age distribution is. So when you look at who goes on travel, who goes out to restaurants, between 45 and 55% of those kinds of services are purchased by in ages between 50 and 79. So those people have to be comfortable that when they go out, that they're going to be safe. And so if you really want restaurants and retailers to fully hire back the people that they had as of February, then customers have to be coming back to restaurants, hotels, and retail chains. So I think it's really important to get the public health right. If we don't get the public health right, it's going to be completely impossible for us to get the economy right.